I'm going to tell you my thoughts on BP and Shell and why I personally think they are a terrible investment and that you should just sell them and cut your losses. Disclaimer, I'm not a financial advisor, and if you seek financial advice, please see a licensed professional. BP and Royal Dutch Shell are some of the most popular investment in the UK for income seekers. This means that many institutions and therefore funds have got them in their portfolios. And it is also such a large amount of the FTSE 100, since they are some of the highest market cap companies in there. This also means that there is a weighting towards them. So effectively, many people already likely own these companies in their portfolios with or without their intention. Regardless, this also means that there are a lot of people on pension plans that seek this income, and they are known for their higher yields, which can be quite an advantage. I understand that many of you will likely hold these stocks, and therefore if you disagree with me in any way, don't be afraid to click the dislike button down below or leave your comment expressing your opinion. Firstly, these oil stocks are completely at the mercy of politics. And if certain governments decide that they want less carbon emissions by 2030, then the oil companies haven't got a choice but to conform. Fortunately, the countries likely won't all do this at the same time, but it's very likely that they all will be looking at a long-term economic trend of more sustainability. But this is going to end up putting a lot of pressure on the management, as effectively they're going to have to reduce their carbon emissions, and I'm sure that they already likely know how to do so. The fact that they've already created plans for carbon neutrality gives me the idea that they kind of already know, but they're holding off on the idea. Perhaps there's a strong upfront expense. But because of this, the stock price and subsequently the oil prices are extremely volatile. An example of this would be the trade tensions between the United States and China. China could choose to get many of their imports from other countries. For example, oil. Imagine if oil was gotten from Iraq instead of the United States. China could probably get it for a much cheaper price, but this effectively could lead to a crash in oil prices, and therefore oil companies or the diversified oil and gas companies like BP and Shell are likely going to struggle and likely crash too. Which also brings OPEC into the issues, and you very likely would have heard earlier this year about the pandemic oil price war. And this came at a really unfortunate time, as we were dealing with so much uncertainty around the pandemic and that we didn't know what the possible outcome could have been. Whilst at first you think, right, this sounds great, they had created an agreement to unify and coordinate the economic areas of petroleum and the oil industry. Great, right? They can look out for themselves effectively. But this means they are purposely increasing or decreasing the prices based on their decisions. They might decide, right, we want to make more money per barrel, therefore we're going to lower the amount of production we're doing. However, the country signed up to this. Some of them simply can't afford to cut their oil supplies, as this oil production makes up such a large proportion of their economy, example being Iraq, that they will continue producing it. And this is what happened with the price war. Because Russia weren't willing to stop their production, this meant that there was so much oil overflown into the market and subsequently, as I said before, crashing the prices. But then this can also mean that by limiting the supply, they increase the demand. It's simple economics, but effectively they're making money not because they're increasing the quality or the value of the oil they bring, but rather because they're limiting how much they're going to give to people or trade. And this leads to very low investor sentiment. Both BP and Shell trade at very low price to earnings ratios, which subsequently means that these stocks have extreme volatility compared to others than that in the market. The investors are more likely to read a headline and panic sell out of this stock, meaning it could rise further or drop further. And for example, if you'd have invested in Shell at the start of the year and you'd have put £100,000 into RDSB stock, you would now have £50,000. You've just lost half your investment. You might have gotten negligible dividends, but that really doesn't make up for such an extreme loss that you've got. However, you likely would have heard of the term high risk, high reward. And BP and Shell really don't fit into this, and effectively you are at high risk with little to no capital appreciation or growth potential. Where's the reward in that? Some small dividend income that they don't even grow. And if you'd have owned BP in the last 20 years, you would actually be down 51% year to date. And if you'd have owned Shell in the last 20 years, you would have been down 40% year to date. Yes, I know, during these 20 years, they very likely paid a dividend for every single year. This isn't great. You're effectively trading capital growth for dividend income. And whilst, yes, this would make more sense if you're closer to retirement, but surely the point of investing is to not only preserve capital, but grow on top of it. You're not really doing anything and you're very likely just evening out. But what you could have done during this same time period is invested in a stock that's not only growing their dividend, but also the share price is increasing, such as Unilever. You would have gotten far more returns in this time period with a lot less risk, and it's a defensive stock. Since they can't control the price of the asset that they sell, this means that their earnings become very volatile and therefore inconsistent. And yes, obviously they don't just sell oil by the barrel, but rather they convert the crude oil using fractional distillation and sell various side products of it, such as kerosene, which is jet fuel, bitumen, which is road tar. Obviously you've got gasoline, you've got petroleum, which would likely be used in cars and various other engines. And obviously they also provide their own service stations in which they would be making some money from or by selling their products, as well as some other things. But I personally don't believe in the idea of increasing the growth of your earnings by increasing the price of the asset that you sell, rather than adding more value to the customer that buys it. And whilst yes, they are very well diversified in their sector, this doesn't mean that they won't struggle for the years to come. This is combined with the idea that the automotive industry, that it's very likely that a lot of them will be transitioning into electric-based vehicles. You've seen Tesla, you've seen Nikola. These are companies both, well, one of them is producing electric vehicles and they're very popular. Why would you opt for an oil-based vehicle where you'll be paying more road tax, higher price of fuel, where you could just buy an electric car and charge it? And it doesn't seem like it will be too long until the demand for gasoline drops. Yes, I know, obviously it's not going to be sudden, and there are many different things that use these products. For example, it's very unlikely that every single generator in the world will suddenly be transitioned to electric only. No, because they convert, obviously, this oil into electricity, and it is very commonplace in a huge part of the world. For example, being also you have canal boats. It's very unlikely that they're going to completely transition to electric, and still very old models are used. But this does only reflect a very small part of the customer base for these products. And subsequently, in the future, the demand for this is going to die down. So they need to reduce their exposure to this and look towards other streams with a longer potential lifespan. But because of this means that they typically have low profit margins. Yes, whilst they did have slightly higher profit margins in the past, currently they were trading at around 1 to 2% profit margins, and now subsequently they are now unprofitable. Yet they are still paying their shareholders a dividend. This means that they are taking up debt in order to satisfy their shareholders. This is not a sustainable business model. I understand the idea that yes, you would have lost a lot of your capital and therefore paying a dividend is imperative. And I understand why they had cut their dividend during the height of the pandemic sell-off and obviously the oil price war. But why not just completely suspend it and then resume it in the future once they've managed to return to profitability and therefore have got more of a business plan set in stone? But this is already adding to their extremely high debt loads, which subsequently means there is so much more risk priced in this stock for investors. And this also means, since they are taking up debt in order to sustain their dividend, it's very likely that the dividend isn't going to be sustainable unless they suddenly get a rapid increase in growth of earnings. And you really can't expect them to grow their dividend unless the situation changes radically. In fact, even when they were growing their earnings from the bottom of 2015 until the peak of 2019, Shell didn't even grow their dividend. I mean, why bother returning profits to shareholders, right? Why not just store the cash yourselves? BP did grow their dividend, but by about 1 to 2% for 2 years. That's it. And this means it's very likely that the share price will end up stagnating. They don't have much growth potential. They're mature companies. The way that they reward their shareholders is not by the growth of their earnings or their high returns on equity, but rather paying their shareholders larger dividends amounts. But if they're not paying large dividend amounts, they aren't able to sustain it, and they haven't got high capital share price appreciation potential, then the price is just going to stagnate, and that's exactly what it's done historically. And 60% of you right now aren't subscribed, so please consider subscribing, as it doesn't cost a penny and it is after all free. Thank you. Not only this, but you also have a world where we are more thinking about ethics, the environment. And oil really isn't a sustainable resource. And in fact, oil is a completely limited, non-renewable resource. Whilst it is extremely unrealistic to think of in our lifetimes, we could eventually run out of oil. What if next week a study was published stating that we had used up 80% of the world's oil? There would be a huge amount of retaliation. A lot of people would then think, right, hang on, we need to protect our world. We need to really change things up. Are Shell, are BP in situations to be able to rapidly change this? I think not. Immediately, we would be looking to preserve what little remaining oil we have left. And this means that they would have to radically change their operations. And this puts them under far more pressure to become renewable companies. And in fact, if we'd found this information out, how would they even really get much money on their assets, for instance, where they generate oil or distill it? They would have to sell perhaps their other products just to enable to buy renewable assets. I personally would rather put my money in a company with a secure future that have consistently performed well and know exactly the market they're in, and therefore can continue growing their earnings above the market average. And so they can generate high shareholder returns, and the extra profits they make they can pay as a dividend. Would BP or Shell really be a safe investment for you? Historically, perhaps they would have been, and I know that a lot of people had made money on oil, talking decades back. But as these oil areas or deposits really start to dry up, this means that the exploration to find oil is likely going to be riskier, as the easier to access oil deposits are subsequently not going to be around. You're going to have to look for places that are perhaps riskier for human life or riskier for the contamination of the oil, which could impact human lives or even their profits. And to be fair, BP and Shell are making steps in the correct direction, and very much at a much stronger pace than that of ExxonMobil or Chevron. Both of these companies were planning to be carbon neutral by 2050. This means that the amount of carbon they produce, they also take back in. And they had recently changed this, I believe, to 2030, which is an excellent step in the right direction, and therefore does present more of a positive outlook on their future. And not only this, but the CEO of BP has very recently been selling up a lot of his oil assets and reinvesting into the renewables sector. But how long will this take? Can they achieve this in less than 5 to 10 years? Or will it take longer? This could be a very uncertain future for the company, and therefore it could be a tough time for investors too. Energy prices are very low at the moment, and so a transition towards more renewable energy prices, despite the high potential load of energy, means that it's just simply not going to be very profitable in the short term. However, in the long term, it's very likely you could expect higher profit margins. And currently, whether you believe it or not, climate change is a real thing. Have you seen the storms recently in the UK? I mean, this feels like something that would be on the opposite side of the hemisphere, like monsoon season. Not to mention this, I know it was a fairly mild heat wave, but temperatures were a lot higher than what I've experienced in my lifetime. And I know that I've only existed on this world for 20 years, and therefore my perception of it would be a lot more limited to some of you watching this video. But it definitely feels that in my lifetime, the weather has certainly gotten more severe. And more people seem to be becoming aware of this. You have Greta Thunberg, a huge public figure now, fighting battles to protect the environment. And it won't be long until oil and gas is under the firing line by many different countries. And so this will require massive infrastructure changes to the businesses and extreme altercations to their business models. I strongly believe that they will be under extreme pressure to change their ways. And there's always a risk that they might not manage to be carbon neutral by 2030. BP and Shell are going to come out of this crisis completely different. And honestly, this could potentially be the perfect storm to buy into. There's a lot of uncertainty, and if you were planning to hold this stock for 20, maybe 30 years, then perhaps you could see a decent return on investment. However, if you're looking at this for a short to medium term trade, honestly, you'd probably be better off with income bonds. It looks like it's going to be in the red for a while now, and this seems to be extremely cyclical. But most importantly of all, oil is an extremely complex industry to understand. And if you don't understand the diversified ways in which BP or Shell create their revenue, then you really shouldn't be invested in this sector. However, I completely understand if that you're currently working in this sector and therefore have a greater understanding of this than perhaps I do, have a less negative look on the OPEC, that it does make a lot of sense to me why you would be invested in these stocks. Although at the same time, whilst you would disagree with me, it's very likely that you would have found much better alternate, but perhaps smaller and more risky oil companies to invest into instead. And as far as it goes, I would much rather prefer to buy into BP than that of Shell. They are leading the industry at a faster pace into renewables, and this was something they were planning way before the pandemic. Shell were just like, yeah, we'll do this, and we'll get to it eventually. But also that BP were historically able to show that they will manage to deal with a severe crisis of the BP oil spill, in which they had to pay out billions, and many lives were subsequently also lost. Not only are they still around today, but they had managed to weather that, and it's very likely that they'll weather this as well. And this combined with, up until the oil spill, that they actually had an excellent dividend growth rate, and that really puts Shell to shame. And perhaps someday, if they're able to get into more control, really push towards renewables, I might look upon this investment again, and perhaps I'll jump in. However, for now, there's too much political uncertainty, pandemic uncertainty, and their futures don't look good. Do you own BP or Shell? Why do you hold them? Please tell me why in the comments down below. Thank you for watching. I'm Osborne Foreman. Have an excellent evening.